not working, right?
Okay.
Can you hear me now, Andrei? Can you hear me now? No sound yet?
Nope.
Okay. Even now you can't hear me?
Not getting anything.
Not getting anything?
Maybe it's in your Google Hangouts, you know.
Okay, let me try.
Maybe you have the wrong mic set up in the Google Hangouts settings. I'm not sure.
Okay, how about now? How about now?
Like if you go to the top of the screen settings, maybe that's weird. No idea why.
Okay, how about now? How about now?
Yeah.
Could you hear me now?
Yeah. Can you please say something now? Because
Could you hear
oh
me
yeah.
now?
Okay. Yeah. Okay.
You can?
So yeah, as usually happens, the problem is my being an idiot. I didn't have the speakers set up properly. I had my laptop speakers instead of my microphone headphone
Okay.
speakers. Okay,
Alright.
hearing you great now.
You hear me now?
Sorry.
Okay.
Yep. Sorry about that.
So no problem, no problem. It's normal to have these tech issues, you know.
Yeah, especially when you have me on the other side. So.
Yep. Where are you based now, Andrei?
Romania, Eastern
Romania.
Europe, and you're from Singapore right now.
Yes, I am.
Yeah, I know because I have my clock set to Singapore time right now.
Oh, great. What time is it there right now?
Actually, I know it's 4 p.m. in Singapore, and I don't know what time it is here. I think it's.
Can see it's a daytime.
Yeah. It's something like 11 a.m. ish.
Okay, morning. Okay.
Yeah.
Then good morning to you then.
Good afternoon, actually, to you.
Okay.
Yeah.
Good morning to you and good afternoon to me. Alright, okay, let's get into the questions for you, alright? Andrei, since some of my subscribers might know you, some of them might not know you, so could you please introduce yourself?
Yeah, well, first of all, thanks a lot for having me on. And some of you might know me through the 1 Minute Economics YouTube channel, where I kind of specialize in making complicated stuff simple to understand. It's basically just a channel I started initially as a hobby, just me saying, yeah, I'm going to record maybe a video every 2-3 months and see what happens. Well, what happens is that people started liking my content. They said, hey, why don't you make a video about this? Why don't you make a video about that? So I did. And now when I look back on my #1 playlist, on the first playlist I started back when I launched the channel, it now has like 150 different animations, and just it's crazy. Even right now, it gives me goosebumps when I think that even my basic playlist now has something like 200,000 views, and it's just crazy. I never really expected 1 Minute Economics to turn into what it is now.
Amazing. That's really great work that you're doing, and I've seen actually a couple of animations that you've done, and I would say that's really great. And a lot of the things that you shared are very easy to understand, because a lot of times people find economics being oh, you need to sit in this boring class and then listen to the lecture and then you fall
Exactly.
asleep. And then you made it just so simple, so straightforward for beginners to understand. So that's really great. So if you guys want to check out Andrei's channel, go to 1 Minute Economics. He's doing some really great content, especially if you want to learn basics about economics. So second question for you, Andrei, is something really exciting. Your book is coming out on the
Oh
6th
yeah.
of August,
Yep, it is.
right? Mm.
It is, and actually, like I've felt a huge sense of responsibility and also urgency even writing this book because the people who know me from 1 Minute Economics, they know I kind of made a name for myself on that channel by being a balanced economist who presents well-researched views uh, to his subscribers and stuff like that. And that's what I tell people. There are lots of individuals on the internet who are all doom and gloom and who say the world's going to end tomorrow, and they say they've been saying that each month for 2 years, you know. So when those people panic, it's probably fine. But when someone like myself panics, I would venture to say that it might be a good idea to just research the things I'm saying. Like I tell people, my goal with this particular conversation that we're having, I mean, if you buy my book, if you buy The Age of Anomaly, great. If you subscribe to my channel, great. But even if you don't, just don't close this browser tab without at least performing a bit of research yourself. You know, that's my only goal. Getting people to take a minute, of course, out of their busy schedule to think about these things because I truly do believe that what's coming, one, is not going to be pretty, and two, most people are going to be on the wrong end of it, unfortunately.
That's really great. And also, that's what your book is all about, in summary. If you guys want to check it out, you can approach Andrei, okay? And also, you wrote one really interesting book, which is Wealth Management 2.0. Could you tell us a
Yep.
little bit more about what that book is all about?
Well, the thing is, I'm also an entrepreneur and an investor. Like, I've ran all sorts of projects on the internet. I've had content writing businesses. I have had an auction platform. I had a small escrow website, which ended up indirectly being sold to escrow.com, which was then sold to freelancer.com. I had, a gazillion projects. So on the one hand, I'm definitely someone who has been making money online for a very long time.
Mm-hmm.
On the other hand, I'm also an economist, and I think this very weird combination puts me in the best possible position to write the book Wealth Management 2.0, which is the only personal finance book out there written specifically for people like us, for people who make money online. Because by being an economist who also is a part of his target audience, I feel that I'm giving people authenticity. Like, I'm not this economist who just read a bunch of books and then regurgitates the things he read. I have kind of the right balance between book smarts and street smarts, if you will. And that kind of authenticity enables me to give people actionable advice, to give people tips they're actually going to be able to put to good use because I've been there, I am there. So I think a lot of people found value in that part of my book.
That's really great. That's really great. And the thing you mentioned about being street smart and book smart, I really can relate to that because back then in university I studied economics, and the whole entire textbook is basically that thick, and it's like tons of theory, but not a lot of the theories inside can be applied in real life. So I like that you have a combination of being a book smart and also being a street smart. So with that, I really want to ask Andrei, one question for you is, how do you see the economic outlook for the US and European economies, and how does it impact traders and investors within the next half of this year and also within the next 5 years?
Well, right off the bat, I want to say that only once has it happened that there was more time between recessions than there is now. So, strictly from a cyclical perspective, a case could be made that we are, quote unquote, due a recession at this point. But what people need to understand, like, I'm someone I'm the type of economist who gets his hands dirty. Like, I even trade cryptocurrencies. I'm out there. So I'm not afraid of just a market crash. This is what I want to tell those who are listening and watching. I'm not afraid that, oh my God, the stock market's going to collapse by 50%, because again, as someone who even trades crypto, that's nothing. I'm accustomed to huge levels of volatility. I'm afraid of something much worse. And you've mentioned the United States and also Europe, but everywhere, really. The narrative so far, the main conversation has been that whenever there's a crisis, governments and central banks come to quote unquote save the day, right? So we had the dot-com bubble, but don't worry about it. Central bankers came, they lowered interest rates, and they saved the day, everyone said. But there was just one problem. This came at a price. And the price for saving the day was that they inflated an even bigger bubble, the real estate bubble. As we all know, in 2007 to 2008, that collapsed. But don't worry, once again, the narrative remained the same. Central bankers and governments are coming to the rescue. And there was a problem. The market demanded more stimulus this time. So lowering rates to 1%, like after the dot-com bubble, was no longer enough. They had to be lowered all the way to 0%. In the United States and in the European Union and Japan, they even went into negative territory. And in the US, for example, they pumped money into the system directly to the tune of $85 billion each and every month. And just think about it. That means $1 trillion per year. And from 1913 up until the Great Recession, so in almost 100 years, the monetary base in the US had grown to $850 billion. So essentially in 1 year, more money was pumped into the system than had accumulated in almost 100 years. And it's these pockets of anomalies that worry me, because eventually, and this is what I was trying to get at, of course, we're going to have another financial crisis. The markets are going to crash, everyone's going to panic, and of course, central banks and governments are going to say, don't worry, just like last time, we are here to save the day. The problem is that as of a certain point, the market is going to say no. We no longer have confidence in you. We no longer have confidence in the ability of central banks and governments to save the day. And way more things than people realize are confidence driven these days. And when confidence is lost, everything is lost. And whether we're talking about a loss of confidence in the banking system or in currencies. Now, of course, in big institutions and countries, for example, the IMF, there are plans out there for such situations. Like, for example, if people lose confidence in the dollar, the euro, and so on, then maybe we're going to use the IMF's currency, the SDR, as a global reserve currency. But, the thing with plans is that when people panic, plans tend not to work very well. And it's precisely this type of situation that I'm afraid of, which is why I tell people, don't try to time this. Don't. Because unlike many of my peers, unlike many of other economists, I embrace my incompetence, Like, I don't claim to be the guy who tells you, I know exactly that the next financial crisis is going to start in 7 months, 2 weeks, and 1 day. I don't know. I genuinely do not know. And not only do I embrace my incompetence, I make it a core pillar of my strategy. And I think people should do the same. Like in my book, In the Age of Anomaly, I do two things. On the one hand, I tell people to take a look at history, at what happened in the past. And they do so not because they're going to be able to predict the future. History doesn't repeat itself, but it rhymes. And by looking at history, you're going to catch a glimpse into human nature. And that is going to help you position yourself better. So the first dimension of my book is all about teaching people a thing or two about human nature, drawing parallels, similarities between what happened in the past, so that they can better position themselves to spot the next financial crisis, hopefully as early on as possible. But I think about these things all day, but I need to have the humility it takes to understand that the next crash might catch me by surprise as well. And therefore, I spend just as much time and energy in my book telling people how to be more financially resilient in general. Because I think this is what a lot of individuals make the mistake of overlooking. The fact that if you implement a few small steps, but internalize them and make them a part of your life, then words cannot begin to describe how much better off you're going to be than the average individual to withstand anything life throws at you, whether we're talking about the big reset I'm worried about in my book, or whether we're talking about things like personal disasters like a medical expense or something of that nature. Like, people find so much time to binge watch Game of Thrones or House of Cards or whatever. And this is why I've started 1 Minute Economics. I told them, okay, fine, you spend these so many hours binge watching shows or doing non-productive stuff. I'm not even asking you for that many hours. Just give me a minute of your time, or just give me a bit more time to read my book. But again, my book, like everything I do, it's not like having, like you said, an arrogant professor talking to you. It's like having a friend talk to you. It's like having a friend talk to you who just happens to be good at economics and money stuff, you know? And this is what I tell them. You don't need to make it your life's mission to prepare. You don't need, I'm not telling people to become preppers, stock up on guns, ammunition, and move to the woods, you know? I'm telling them that by implementing a few simple steps, they're going to be able to practically save themselves and their families. And this is what I'm all about. This is why I'm reaching out to so many people from all over the internet. This is why, for example, until Sunday, my book's going to cost 99 cents. You know, like, I'm obviously not in it for the money. Someone who's in it for the money is not going to price his book at 99 cents. I'm in it to kind of plant ideas in people's minds. You know, I'm here to plant these ideas in the hope that enough people are going to take action. And if that happens, there's nothing more I can want out of my career than for people to genuinely change their lives as a result of some of the things I'm saying.
Yep, that's great, Andrei. And guys, if you really want to check out his channel, I've seen some of your comments over here you've written down. I'm going to put the link down in the description later on, so don't worry about that. But in the meantime, let me just ask Andrei a few more questions. I'd like to mention about recessions. So when it comes to, let's say, the next recession, how can investors and traders take advantage of economic downtimes and potentially maybe profit from it?
Yeah, well, of course, Warren Buffett tells people to be fearful when others are greedy and greedy when others are fearful. Yeah. And once again, it boils down to being financially resilient, because someone who is financially resilient is also a person who has, for example, a cash cushion, money set aside for emergencies or whatever else. And if you are, if you are wise enough, one, and of course, two, leaving hypocrisy aside, if you're in a good enough financial position to take advantage of certain things, then of course, you're going to do very well. Because I tell people in my book that it's all a matter of putting together your own strategy, of saying, look, take a long walk in the park, do whatever it is that clears your mind a little bit, and kind of make a list of assets that are desirable in your case. Because, if you live in a politically unstable country where you're only a regime change away from losing it all, then maybe real estate is not a good option for you. Or if you live in a country with a proven track record of respecting property rights, then real estate is interesting. So whatever you do, make a list, a comprehensive list of assets that are worth investing in from your perspective, and then make it a goal to eventually, and the key word here is eventually, to eventually have exposure to as many of those assets as possible. And therein lies the key, because if you have a plan in place, and if you're also financially stable enough to execute that plan, then, of course, moments will come when everyone's going to panic. And someone who panics, obviously, bottom sells his entire stock portfolio at very low levels. Whereas someone like yourself, who says, wait a second, I am interested in stocks, I am following certain stocks, I do want to add certain stocks to my portfolio, someone like yourself is going to say, wait a second, everyone's panicking, I have money at my disposal, and I have valid reasons to want this asset, so I'm going to buy it right now. That's the key. And eventually, by kind of applying this principle, you will end up having exposure to all of the assets that you consider investment grade. It really is not rocket science. It's all a matter of articulating a logical plan and executing. It really is simple. This is the idea I want to push to people.
Okay, that's great, Andrei. Like, I love the quote they mentioned about Warren Buffett, where when other people are fearful, we need to be optimistic. And speaking of passive income, just now I mentioned a couple of points on different asset classes that you can invest in. You're a very successful investor yourself. You're a very successful online entrepreneur. So what are the top 3 passive income sources would you say that is best for beginners who want to transition from having a 9 to 5 job, they feel stuck, to wanting to live off of passive income?
Well, right off the bat, I want to say that the most important and also common question that I get from people is this. Andrei, I don't have that much money at my disposal. What do you think I should invest in? And I tell these people, and I've done this all my life, and even in my book, I have an important section dedicated to it. If you don't have a lot of money at your disposal, but want to do well in the long run, guys, invest in, who do you think? Invest in yourself. Invest in yourself, in your ability to provide value. Like, just think about it from an investment perspective, please. Let's assume you're a photographer, right? If you invest in yourself, if you take a few classes that help you become a better photographer, or if you invest in equipment or knowledge or anything that makes you better off, then you are going to be able to reap the rewards of your hard work for the rest of your life. And this, it's very hard to put a price tag on it. If successful people calculate just what the ROI has been on investments that they've made in themselves, not even Bitcoin can be a match against that. That being stated though, in my book, I try to give readers the right balance between assets. And I divide assets into 2 groups. On the one hand, status quo assets. So assets that everyone knows about, stocks, real estate, you name it. On the other hand, you have assets that I specialize in. For example, you have what I call trailblazer assets or new assets like domain names, cryptocurrencies, and so on. And I think that you should make it a goal for yourself to have exposure to both. In each case, in each of those 2 dimensions, there are 3 subgroups. 1, fair weather assets, or assets that do well when people are optimistic, like for example stocks.
Yep.
Then you have what I call life jacket assets, so assets people purchase so as to protect themselves, like for example precious metals. And then of course you have sentiment neutral assets for which there's no major correlation when it comes to sentiment. And I do believe you should make it a goal to have exposure to assets from status quo as well as trailblazer assets in each of these subgroups. How much, it all boils down to you. Of course, I'm not going to tell someone who's 65 years old and can barely use a smartphone to buy a bunch of Bitcoin. Of course not. But if you're tech savvy enough to be able to pull it off and you don't mind the volatility, then yeah, I'm going to tell you to get some crypto. I'm going to also tell you to get some real estate. I'm going to also tell you to get, it's all a matter of tailoring the strategy you're about to make to your specific needs. And this is something I try to help readers do.
Agree. That's really a great point. And one thing I really like they mentioned is that you need to tailor your personal needs to that particular asset class rather than pursue this because everybody is pursuing that. So that's
Exactly.
a really great point that you mentioned. And another thing is that since you mentioned about Bitcoin, cryptocurrencies, what do you think is the outlook for Bitcoin and cryptocurrencies in the next few years? Should people invest in it now or should they avoid it?
Well, I have personally done very okay investing in cryptocurrencies. And as someone who lives in Romania and had to deal with many problems that people from the West are unaware of, like, for example, the fact that as an entrepreneur, you can only imagine how frustrating it was for me many years ago when not even PayPal accepted Romania. So essentially, having something that's, as free as Bitcoin, because, at the end of the day, Bitcoin cannot ban your account, Bitcoin cannot block your account, Bitcoin cannot say, hey, we don't want to do business with you. Bitcoin doesn't care. You can be from any country in this world, Bitcoin doesn't care. Same with other cryptos. So I do believe that there are more than enough fundamental reasons for me to safely say that crypto is not going anywhere. It's not going anywhere. On the other hand, just like with anything else, you have to understand what you're investing in, because way too many people think, yeah, I'm just going to invest $100 in Bitcoin now and I can just pre-order my Lamborghini. It's going to be just great. No. Bitcoin is what it is. It's not what you want it to be. And by Bitcoin or domain names or other newer asset classes, by investing investing in them, you have maybe the biggest opportunity of your generation. But on the other hand, there's more volatility. There are higher risks. So with Bitcoin, you have to accept the fact that it can drop from 20,000 to 6,000 and be lower and lower just like that. So I cannot stress enough how important it is, not just for me to say, yeah, sure, cryptocurrencies are worth investing in, but for me to say cryptocurrencies are worth including in your bigger picture plan, because at the end of the day, you have a problem. If you've invested all your money in crypto and crypto went down the way it went down so far in 2018, you obviously have a problem. But it's a money management problem on your end more so than a problem of crypto, because Bitcoin and crypto in general, they're just doing what they've been doing all along. Like, few people know that in June of 2011, for example, for a few seconds of time, and you can find this on YouTube if you search 2011 Mt. Gox market crash, after moving from $1 to $31 and stabilizing at $2 after a major crash, Bitcoin actually fell for a brief period of time all the way to a cent, if you believe it or not. So if people want to crash, that's a crash, And crypto has been doing so all along. It's just the way in which we tend to get a bit crazy when it comes to technology. We've done so when it comes to crypto. The same principle applied during the .com bubble, or even in the more distant past. British railway manias of the 18th century that I talk about in my book as well. It's just the way it works. If you want to invest in something technology related, and if you want a part of those juicy potential profits, you have to understand that you need a stomach for it. It's not for everyone. If you cannot handle the volatility, then just choose other asset classes. But if you do choose in crypto, know what you're getting yourself into. And I personally am pretty excited about crypto as a long-term option for people.
Okay, I really like what you mentioned about that you need to do your research first, know what you're investing into before you go into it. Because a lot of people just go into asset class because they see people buying Lamborghinis, because they bought some Bitcoin, and then they just follow suit without knowing what they're investing into. So guys, no matter what you invest into, like what Andrei said, do your research first. Doesn't matter whether it's stocks or forex, okay? So that's a really, really great point that Andrei mentioned. And another thing that I'm curious about is, when it comes to my community of forex traders, I get this question a lot, is some of them want to start a hedge fund. So I saw that in your channel you talk about hedge fund, you compare mutual funds with hedge funds. There's a video on that. And how would you see the hedge fund industry in the next few years? Is it a good time for aspiring hedge fund managers to start a hedge fund in these few years?
I truly believe that there are contexts in history, and we're about to enter one of them, in which a lot of people are going to get what I like to call a slice of humble pie. So the financial industry has exploded. It has literally exploded. And some of this growth makes sense, but I have to say that many of the pockets of anomaly that I'm seeing throughout the system pertain to the financial industry in general. Way too many people who should be nowhere near a hedge fund decided to start a hedge fund. Way too many people who should not be, who can barely manage their own finances, are giving financial advice. And in my book, I talk about my biggest fear, which is a big reset. And I want to make it crystal clear to people that perhaps or probably the hardest hit sector when it comes to this big reset is going to be the financial sector. Now, of course, I'm not saying I'm not perfect. I'm involved in the financial sector as well. I'm saying this as someone who, I even leverage trade crypto every now and then. So I'm not a saint in that department. But what I'm trying to tell people is that there are ample reasons to be bearish when it comes to the future of the financial industry as we know it. And for the people who are thinking about starting a hedge fund, and generally speaking, for the people who are thinking about building a career in this field, I have a pro tip for them. Don't. So don't, because the next crash, I think, is going to facilitate the type of environment in which it will no longer be able to just talk the talk without walking the walk. So just look in your own backyard, look at your own finances, look at your ability to genuinely generate added value in a sustained manner through what you do. And then and only then can you even think about the perspective of managing other people's money or doing something in this field. You know, way too many people embark on this journey just because they know a bunch of fancy terminology and they seem smart to their friends. But seeming smart to your friends is not enough. Knowing terminology is not enough. And if we look behind the scenes when it comes to many of these projects, like, it gives me nightmares personally. I don't know about other guys, but yeah.
Okay,
sorry for being a bit pessimistic on this, but
yeah, it's good to give your own perspective on it, because people need different kinds of opinions rather than optimistic perspective all the time from a lot of economists that I know. And when it comes to another industry that a lot of people pursue, which is a typical 9 to 5 job. Nowadays, we know that our job is not 100% secure. So would you recommend people to go into the job market right after they graduate? Because right now in this season is where kids graduate from college. Do you think that they should pursue a job market because of the security, or should they have a side hustle to protect them from getting so-called retrenched and fired?
Well, right off the bat, I want to say that for someone like myself who lives in Romania, it's not like Romania gave me that many amazing offline options. So for someone like myself, it was a no-brainer to do my own thing, because actually at one point I was at a national competition in high school full of smart kids, and they kept us in the dirtiest rooms you can imagine, the most awful conditions ever. And that's when it hit in my case, when the light bulb went on, and I said, I don't think that this system is capable of giving me the career I want. So I ended up building the career I wanted myself. On the other hand, and that's why I keep telling people that it's all about tailoring a solution to your needs. It may very well happen that in a lot of countries, you do have good 9 to 5 opportunities to learn stuff, to make money as you're learning stuff, and of course, to eventually have some side hustles that can spread wings of their own. And of course, there will come a time when you're going to just say goodbye to your 9 to 5 job and move on to the side hustle, to what will now be your full-time hustle. So I'm all for it. However, I see way too many people who say just, yeah, quit your job, do it right away. No. What I tell people, as someone who has been involved in so many industries and who worked on so many projects, it's that the plans you make on paper, they probably sound great right now. But, there are roads paved with failure that are full of plans that sounded good but executed poorly. So you might think that you have it all figured out, but until you actually start a project yourself, until you lose money yourself, until you see how frustrating it is to work more than other people on a project and make less money for them for an extended period of time, until whatever it is you have eventually lifts off, if you don't understand the realities of running a business or doing your own thing, then you're starting out on the wrong foot. Because especially on the internet today, way too many people start doing something themselves with false hopes. They see so many people who are successful and make it seem as though they've been successful overnight. And of course, if you subscribe to their course for just $99.99, they're going to teach you how to do it simply yourself. But it's just sad for me. It's just sad for me to see so many bright people who don't have realistic expectations. So my answer to your question is simple. If you live in a country like Romania, and if it's clear to you that the quote-unquote system does not give you good enough job options or whatever, then of course, you don't have a choice. As far as I'm concerned, I never had a choice. I had to do something myself. It was the only rational decision. When it comes to people from developed countries, however, I do have to stress that you should be open-minded and maybe having a 9 to 5 job for a while you figure out what it is you want to do in your career and while you put together some side hustles, it might actually be a smarter solution in your particular situation.
Okay, that's really great, Andre. And I just want to take a couple of questions from the comment section right here because we are live right now. Okay, this question is really common that I get from Hemapriya. He says that as a novice trader, would you recommend technicals or fundamental analysis?
My answer to that question is yes. My answer to that question is yes.
Both together or?
Yeah, exactly. Yeah, I actually have a video about technical analysis and fundamental analysis, kind of like a comparison video, on 1 Minute Economics on my YouTube channel. And I tell people they don't have to choose one. And in fact, it's silly whenever I hear, like, I keep in touch with some people who, feel like they have to pick a side. Like if you're a technical analyst, then you should only look at the charts because the charts tell you everything you want to hear. I mean, there are a bunch of people who make money that way. There's no question about it. It's just not what I would do. Like I trade assets. I even trade crypto, which is extremely volatile and extremely risky. But I do so through a combination between technical analysis and fundamental analysis. On the one hand, of course, I'm always watching the charts. I'm always looking at price action and what that indicates. But I would never even be able to imagine a strategy of mine where I don't correlate the things the charts tell me with the idea of keeping my ear to the ground, with the idea of seeing what's happening. For example, when it comes to crypto, seeing what's happening in the crypto world. What are the developments when it comes to the legislative dimension? What are the developments when it comes to the technology part, So I strongly feel like it's obviously the easier thing to do for me to tell people just do technical analysis. And I'm not saying you can't be successful that way. But I'm one of the weird economists who likes to sell people the things they don't want to buy. So in my opinion, words cannot begin to describe how important it is to be a well-rounded investor. And by well-rounded investor, I mean just someone who has a firm grasp on the technicals as well as fundamentals. There's just no other way, in my view.
Okay, I like that. Because a lot of people think that, they need to pick one that is better. Because a lot of people like to ask, is technical analysis better or is fundamental analysis better? Why not just combine both together? That would be the best way. Okay, I'm going to take another question from the comment section right here. Okay, wait a second. How do you, let's say if you're managing a fund, how do you attract more investors to grow your account? Do you go to meetings? Do you go to LinkedIn or something else?
Well, that's always the $1 trillion question. At the end of the day, it's your brand that you have to push. It's just like with every other project. If you're into technology and want to become a popular consultant or whatever, again, it's all a matter of pushing your brand. It's all a matter of, sustainably telling people who you are. And the internet is full of individuals who had, a bit of a fly-by-night reputation. They appeared on TV a few times, made a few predictions, and they were gone like the wind, never to be heard from again. So, yeah, especially, and this is something people forget. They're so quick. Yeah, I know exactly what's happening. Why don't I make this spectacular clickbait prediction that's going to get people to link to me and maybe to invite me on their shows and stuff like that. It takes years to build a reputation, and it can only take a few minutes to ruin it. So the most important thing I want to push to people, especially when they're doing something where there's as much of a reputation component as with managing other people's money, you should aim for sustainability. Because how many, it's ridiculously hard for your brand to have staying power in the financial sector. It's harder, I believe, than in many other countries. There's a huge turnover rate, people come and go, and it's all a matter of building your brand. What you choose is, of course, entirely up to you. If you choose a bombastic approach where you want to shock people with your predictions, and maybe it's easier to get short-term attention that way, then that's your prerogative. But I would strongly recommend, of course, the mediums through which you do it, they're all up to you. For all I know, you can start a YouTube channel. You can be active on LinkedIn. You can develop a reputation on Twitter. again, it's all up to you. There are various ways to skin that cat, but just keep in mind how easy it is to lose your reputation, one, and never lose sight of the fact that in the financial sector, more so than in other spaces, the turnover rate is huge, huge. So if you're in it for the long run, you have your work cut out for yourself, I think.
Okay, that's great. I really like the fact that you talk about personal branding. Guys, no matter what you choose to pursue, if you want to market yourself, attract investors, attract customers, it still comes down to building a personal brand. Doesn't matter what business you're in this century, you need to build your personal brand. That's what Andrei mentioned, and a lot of the people mentioned, like Gary Vaynerchuk mentioned that too, so that's really important. Build your brand, also your long-term reputation. Okay, I'm gonna take one last question from the comment section right now. We have Christopher from London. Hi Christopher, thanks for your question. And he asks, I'm learning technical analysis right now and feel comfortable improving at this. However, I am new to fundamentals. How do I start forming fundamental opinions as an amateur?
First of all, hi, Christopher. And it's a good question. It's a great question. And first of all, I'm glad you're asking yourself that question because it's exactly what I would be doing in your position. The single most important thing I will recommend to you when it comes to the fundamental dimension is willfully exposing yourself to contradictory opinions, because this is the biggest mistake we tend to make. We tend to adopt a certain ideology, a certain way of viewing the markets, a certain way of viewing the world, and of course we only watch the people who agree with us. Like if we're Keynesians, we only follow Krugman and other Keynesians. If we're Austrians, then of course we're going to give a quote from Mises to every question imaginable. And this is the biggest mistake people make from a fundamental perspective. If I want to have a conversation with someone who thinks exactly like I do, then I can just sing in the shower or look in the mirror. There's far more value in exposing yourself to viewpoints so different to yours that you're going to consider it insulting. But this is something that gives you mental elasticity, and it's perhaps the most important trait you need to have from a fundamental perspective. So at the beginning, it's going to seem weird because you're venturing outside your comfort zone by listening to someone who makes you angry, because a lot of times some of the people you're going to be listening to, because you make it a goal to expose yourself to so many opinions, they're going to make you angry. You're going to hate them. You're going to hate every minute of it. But then as time passes, and as this strategy kind of establishes roots and in your brain and becomes a part of who you are no longer going to hate the people who see things differently. Instead, you are going to thank them for the opportunity of sharing a different perspective with you. Because at the end of the day, you're the one who's going to make your decision, But it's such a privilege, like what we can do on the internet today, to be able to see, to gain access to so many people from so many backgrounds who can give us the full perspective. And where we take it, it's all up to you. So if you're to remember just one thing after our discussion, it should be this. It should be this. Make it a goal for you to venture outside your intellectual comfort zone, because most people don't do it, and then they're surprised that in the long run they lose money and they say the markets are rigged, and of course they're never at fault. Other people are at fault because they lose money. No. Take full responsibility for your actions and do things in a sustainable manner. I'm very happy for you that you're learning TA. I'm even happier that you want to incorporate fundamental analysis as well, and I firmly believe that you're on the right track. So just congratulations and the best of luck to you.
Okay, cool. Best of luck to you too, Christopher. Okay, I'm not gonna take more questions right now. Because I have one final question for Andrei. You're a very expert in economics, and there are tons of many different ways for us to learn economics, correct? We can learn from books, we can learn from mentors, we can attend classes in university, in school. So which would you say is the best and fastest way for somebody to become good in economics?
Well, the best way is always the one that works best for you. But personally, at the risk of being a bit too self-promotional, the very reason why I work so much on my channel, on my books, is because what I'm doing works. And it doesn't take a lot of time to become good at economics. Like, I've had experience with people who, got their bachelor's degree, got their master's degree, and then they watched my videos and they were like, oh my God, I learned more from a few of your videos than I did after an entire semester of listening to a board professor who didn't want to be there, and I wanted to be there listening to him even less. So the internet gives you just so many awesome options at your disposal for free. Like, I truly believe that if you make it a habit of, for example, learning from even one of my videos per week, this should be your goal. Learn one concept per week from 1 Minute Economics. And in some cases, the concept may be simple enough for you that you just watch a video once and you're going to be able to remember what I've said forever. If it's something more complicated, then you can watch it again a few times, but it's only a minute or so. That's the value proposition I give to people, because way too many individuals make the mistake of thinking that now economics is just way over my head, and for me to learn the basics, I have to read a gazillion books. Well, if you want to read a gazillion books, then congratulations. I definitely recommend reading as much as you can, but to master the basics, it's far simpler than people realize. And I even teach people stuff like, the standard deviation or complicated statistics related terms. I can even teach those in a minute. And it's just shocking how much can be done with so little of an investment of time on your part. So where to start? Just start doing online. Even as someone like, look, I have the academic dimension of my career as well. The bachelor's degree, the master's, the PhD. That's also fine. But I have to say, most of the things I have learned and most of the ideas I've exposed myself to came as a result of my own journey, not something that I've learned and organized for. There's a place for that as well, but it's very hard. It's very hard for the traditional academic system to compete with this dynamic, awesome thing that is the internet. It's impossible. It's an unfair fight, and they can't win it.
Agree. But would you agree that the best way for somebody to learn something is to just do it and teach it to other people rather than reading about it?
Of course, like this is one of the biggest things I tell people about myself. There's little value in living in an ivory tower. Like, as an economist, I'm someone who invests himself. I'm someone who trades himself. From engaging in highly leveraged trading in crypto to doing real estate stuff here in my city in Romania, which is there's tons of value in also walking the walk, and there's tons of value in actually practicing what you preach, because way too many people don't do that. So by all means, even when it comes to trading, for example, few things in this world are going to give you more valuable lessons than burning a trading account or losing money. That right there is education. So for sure, I've done so many things on the internet that I'm tempted to say, whenever someone asks, okay, Andrei, what do you do for a living? Well, I'm a doer of things. I'm a professional doer of things. And this is what I hope people will become as well. Learn stuff, internalize stuff, but practice what you preach. Always be hands-on.
Love it. Guys, whatever you want to learn nowadays, do it hands-on. Books are good, but the best way for you to learn something is to just keep your hands busy, alright? So thank you so much, Andrei, for answering all the questions that I've given to you and all my subscribers have given to you. And thanks for sharing your great tips with all of us. And guys, if you want to check out Andrei's books and website or details or YouTube channel, I'll put everything down in the description later on once this video ends. Alright, so go and support his channel too. And thank you so much, Andrei, and all of you guys who are here watching this with all of us. So with that, guys,
thanks a lot for listening and interacting with us. Have a great day, guys.
Alright, thank you, Andrei. I'll keep in touch with you. And hopefully next time if you come to Singapore or if I go to Romania, I can...
Oh yeah, you got it. You got it.
We can meet in person.
Oh yeah, that would be awesome, Thanks again for the opportunity, and we'll keep in touch.
Okay. Talk to you soon. Keep in touch.
Take care.
Take care.